So there's something very interesting happening with this stock. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we look at Paysign. Paysign Premier, the best in digital banking, your complex payment problems solved. We are driven by a passion to provide payment solutions that help our partners succeed and grow no matter what. So you see that there's, they do have a wider portfolio here. So I put this stock back in the day under flexible workforce theme. I do see that it is broader. I put it under employee rewards, but it seems like they have branched out. The server is having some issue updating the data. But yeah, last time it was updated, we were 8% from the 52-week low and 51% away from the highs. So basically, this is one of those potential turnaround stories: buy low, sell high, but always have a stop loss level. The good news is that this stock has been around for a long time. So there's a lot of history here when it comes to different price levels. This current level is very interesting. We have seen a very precipitous fall, and there's been some very nice opportunities before after protracted falls. Like here, you get 70%. Then you had another bad period, and then you get 161%. But you would have ended up with 73% if you didn't use a stop, like some stop level along the way. So yeah, you definitively want to actively manage these kinds of positions. But yeah, here are the weeklies, here are the dailies, just very clear sell-off. But today is very interesting, and we do see some buying action. So definitively some interesting behavior. If we look here at RSI and PPO, this is a historical buy level we have seen before. What was that time? It was back here. Yeah, that was one of the turnarounds we measured. Also back here, the same RSI level. This is a very intriguing level, definitively oversold. Looking at daily data points, with a RSI of like 15.5, this is very oversold. Like big time. So yeah, definitively a very interesting candidate. So in my notes here, I just write over sold. But we could also see it. I mean, there is let's actually say RSI support, because there's something a bit more concrete happening with this stock. Technicals, I think I'll give it a 7. Pretty strong bullish signal. Next, we will look at seasonality. To the left here, this is pretty good timing. You usually see some bullish action into later August. Looking at the table view, we do see that August so far 7.5% loss. September is not like a bullish month either, but we haven't seen a lot of red so far for August. But seasonality is not really bullish. There's just some periods of bullishness before it usually is given up. If you look here at this to the left, green is the last 5-year average, blue the last 7 years, red the last 10 years. So the bullish action usually peaks around 28th of August, and then we all of a sudden give a lot of it back. So definitively a stock you actively manage. But it's also a stock where you can see, bigger gains as well. I think I will give the bears -5. Seasonality is simply not bullish. There are parts of it that is bullish, but it's just too messy. So let's look at the fundamentals, like here. So this is the price-book ratio in blue here. Then you have price to sales in copper, golden, and blue. Now in green, you have price earnings. So we are at a relatively low level. Back here in June of 2020, this was also a buy level for those who look at fundamentals. Looking at the volume bars here, you do see that there's a bit of a volume shelf here, so that's good. Looking at the price targets, the forecasts. So for analysts, they have a 1-year price forecast, and they are all very bullish. Strong buys from the analysts. So obviously, so far we haven't really seen a lot of amazing stuff performance-wise, but I will give the bulls an 8 on this one. This is just pretty good fundamentals. So the categorization here is commercial services. That usually means the XLI. So let's go to pace. And we will compare it against the XLI, which is like the industrials, which also includes business services. Let's also compare it against the XLF, the financials, because there were certainly some financial aspects to this stock. Paysign being the name. So long term, we do have a minus 67% correlation with S&P 500, minus 57% with XLI, and minus 83% with XLF. Daily data points. Minus 61 with the S&P 500, minus 56 with XLI, and the minus 36 here with XLF. So it's the strongest negative correlation we get here consistently is actually with the S&P 500. So it being a negative correlation means that they do have a bit of a tendency to move opposite each other. But when you look at a stock that has massively underperformed anything you can think of, it is more that it is disconnected from the market. But due to the correlation, there's also the possibility that it's not a part of a bunch of like mutual funds and the like, so it could develop its own dynamics. Hence, if the S&P 500 continue to correct, losing the 20 daily moving average in purple today as an example, then Paysign could be weird and actually sort of have a bit of a rally, even though not good times for the S&P. Looking at the S&P 500, 2% loss so far. August is it's a bit of a messy month. There's been some bullish ones, some bearish ones. So if we now compare Paysign with S&P 500, we just have to be aware that there is a negative correlation though. So Paysign, it's really been underperforming the S&P, like in a very big way, and we are at a support level at RSI here as well, and this is the pair. We are at support. Back here, it was a very good time to move into Paysign. Here you had a bit of a temporary rally, but then again, a rally is a rally. Yeah, the seasonality favors Paysign in this pair. Almost 5% loss so far for August. There's been some green months though in August for Paysign. But yeah, when it comes to relative performance, I really do like the support level that is corroborated when we look at the pair, the S&P, and Paysign. I do think I will give the bulls a 3 on this one. I would have given them more if we had more bullish signs, but there's some bullish action here. So we end up with 3.3 here in favor of the bulls. The key signal is that we are at RSI support on the weeklies. So I do think that Paysign here is a pretty interesting stock. So the way I have currently structured my investments is that I have a mix of short positions, bearish positions more correctly, that bet against certain aspects of the market, but I also have bullish positions. So I have a mix, a market neutral portfolio. So I will then put Paysign on like the bullish side, but it's a bit speculative for sure. We're very oversold. And looking at the weeklies here, there could be some support way back here, but then we are looking at a minus 23% stop loss level, and that is just way too much. Just way too much. So let's go here on the dailies. Let's measure this one. Looking at potential support back here, what kind of stop loss would we accept? 5%. That also ties to this support level back here. Yeah. I think a 5% stop loss level is basically the max for this stock. Yeah. So yeah, 5% stop loss level is what I will go for here. So yeah, that's it. Yeah, I do prefer to have automatic like stop loss levels because it removes the emotions from the investment, and it's automated, and yeah, it sort of works by itself. 5%, it's a bit wider than I like, but then again, you don't have to buy much with this stock because the stock price is so low that you can kind of put it in the wild card category. When it comes to managing this position, we have seen that there's been rallies before that sort of just stopped. And there certainly is a risk that we will see that again. There is a turnaround today, definitively very interesting. But if this one works out, I would definitively put on a trailing stop or move like stop level along manually, simply just to secure the gains because they can come fast and furious with this stock. But then again, you can also lose so much of it so fast. So yeah, it's just the way it is. But yeah, Paysign, pretty interesting. Just very oversold. A lot of good signs, but definitively not a stock to marry.